One of the things that helped me out the most when I started trading was live trading. So in this video, I'll break down my Tesla trade that made me $900 in less than an hour. Let's get straight into it. One of the biggest traps that new traders fall into is they just keep on watching trading videos over and over, trying new strategy time after time again, but they don't even know that strategy actually works and you can actually make money from it. So that's why I think live trading can really watch how the trader executes their trades, what they're thinking in the moment, and how you can learn from that and also plan your trades moving forward. So on this trade in particular, I was looking for Tesla to drop to the downside, so obviously I bought puts on the trade, looking for Tesla to move to the downside, and that's exactly what happened. So let's waste no more time and jump over to the computer. So just before we break down the live trade, I'll go over the trade Zello stats and stuff like that. So obviously, like I talked about, I was looking for a downside on Tesla. I bought the 380 puts that expired for February 21st. Like I said, I really never trade weekly, so obviously I went 3 weeks out on the Tesla trade, so I can mitigate my risk. I'm not taking on too much risk at the same time. So this trade, because names like Tesla are really volatile, the one problem I always see is people think you have to oversize in the trades, size up to make lots of money. But in this trade on Tesla alone, I took 3 contracts for a total of about $5,000 in the trade. I made a net return of about 18%. I only took 3 contracts to make that return on the trade. So that just goes to show you guys don't need to risk too much money on your trades, and you can still make decent amounts of money. Anytime I can make $9 to $35 in about 40 minutes, I'll take it. So my stop loss on this trade is about $16 a contract. I entered at $16.40. So I was looking obviously to stop out above this swing high like we always talk about. And I would have been risking about $420 on this trade. So that means to make this trade worth my time and effort, I would have had to at least make $840 in the trade. So obviously I made more than $840. I made $935 on the trade, making this a 2.3 yard trade. So obviously the trade worked out and worked in my favor. I took profits where I need to, and I followed my key levels and trade plan like we'll see in the live video here in a couple minutes. I was looking for this breakdown right here on these candles, entered some puts down here on this candle right here, you can see. And then obviously Tesla just dropped down and rode the 90 MA to the downside. So it really was a pretty stress-free, easy trade. As you guys can see on this trade, the lowest point the trade went to was about $17 a contract. So it never even got close to my stop loss, and it was a pretty easy trade in my opinion. So let's just jump over to the video and I'll break it down for you a bit more in real time so you guys can understand it. So this is what my screen looks like pretty much every day when I'm trading. Up in the top left, my face is kind of blocking it, but obviously I always have the 1 hour time frame up here, the daily time frame up here, and I'm primarily looking at the 5-minute and the 15-minute time frame. I'm entering and exiting trades. You don't want to get too tunnel visioned in on your trades. That's why having multiple time frames on your screen at one time makes things very easy, and you're not getting too caught up on the micro time frames like the 5 or the 15-minute. So that's why the big thing I was watching here on Tesla, as you guys can see, you're coming down to this big key level here at 383. So obviously I was looking for that breakdown below the level, which is why I entered puts on this breakdown, because you guys can see there was nothing here on Tesla below 383 to about 370ish. So I knew if you start breaking down below 33, it was going to be a pretty quick and easy drop to the downside. That's almost exactly what we saw here. So like we saw in TradeZillow, I was just waiting for Tesla to break down below 383 and show me any signs of volume coming into the market here. But once I started seeing some more sellers coming into 383, I entered, like I said, the 380 puts here for February 21st. You guys can see the profit and loss here on my screen. I'm using Thinkorswim, by the way. One thing we talk about a lot inside of option drops is the break and retest. One thing I tend to do sometimes, I still try to get the breakdown, especially names like Tesla. If you're being too patient and waiting for too long, sometimes it can just go without you. So it kind of just goes to understanding how certain names move and how certain names move like that. So I know Tesla, a lot of times you kind of really don't get a retest, so that's why I'm fine kind of entering prematurely. But obviously I know that comes with more risk. But like I said, my risk on this trade was really only up to the VWAP right here. So I was only risking like $2 to the upside. If I would broke right here, stop out. But I was going down for the next target I had marked out around 377 right here. That was the primary goal in this trade. So I'll fast forward here a little bit. We're going 10x speed, and a lot of the times when you're trading, it just comes down to being patient and just letting the trade play out. So I could have stopped out here, made like $200, but that wasn't the trade plan. If I'm risking $240 in trade, right? If I'm risking about $400 in trade, it makes no sense for me to exit prematurely just around $200 profit. You have to let these trades play out and follow your trade plan, your thesis that you had laid out before you enter the trade. Without having a trade plan, you're just gambling and you're taking unnecessary risk. So always have a trade plan before you enter a trade and before you exit a trade. So you guys can see right here, what's one thing we always talk about inside of option drops? The break and retest. So obviously, like I said, you could have, I entered prematurely before I got confirmation, but the one thing we always talk about, you got the break, the retest, and now you're pushing back down. You can see right here, you have these wicks right here established at Tesla at 380, 358, the key level we marked out. That's why having key levels is so beneficial and so crucial. Tesla broke down below that level. Look what happened. You came up and retested that level at 33.58, and you started pushing back down and made a new low of day here on Tesla just now. And you can even see up here, I'm walking away from my trade because I know I'm just following my trade plan. Sometimes I walk away. You don't always have to be staring at your monitor. The only time I'm really sitting here staring at my monitors is when I know inside my head I'm making a bad trade, I'm over leveraged, and this trade could go the wrong way. I could lose lots of money because I didn't follow my trade plan. But when I'm just walking away, you know, dancing, having fun, I know I'm not over leveraged. I know I can just let the trade play out, go towards my target at 377, and it will usually play out for the best. If not, I get stopped out. I try again the next day. But in this case, you can see me. I'm literally walking away. I'm dancing. I'm doing my own thing because I'm confident in my trade. Tesla's dropping pretty quickly here. And you know, I'm just letting everything work out like it's supposed to work out. I try not to influence my trades too much once I'm inside of them. You know, in terms of just, you know, micromanaging them. So that's one thing I recommend you guys try doing. Stop trying to micromanage your trades and just walk away if you need to. You know, hands off the keyboard and just let the trade do its thing without you, you know, constantly micromanaging it, or letting your random oscillators and indicators do all the trading for you. Let the plan you had lay out inside your head, do what it's supposed to do, and stop micromanaging your trades and try and, you know, tweak it while you're inside the trade. Obviously, if you get new information, like let's say a wick started forming out here in Tesla, you started bouncing back up aggressively, then yeah, you might have to, you know, you might have to call an audible mid-trade and change things up. But as you're just dropping down here on Tesla, there's really no reason for me to interfere with the trade. So I'm not gonna get inside the trade, you know, get inside my head and start micromanaging something that doesn't require it. It doesn't require me to, you know, manage that trade. Again, this trade was really straightforward. Not a lot to go over here, to be honest, but I just like showing these live trades, kind of like the thought process and what I was thinking inside the trade. So again, it really just comes down to being patient here, letting the trade play out. You were kind of just stalling down here around like 378, kind of a random level right here. But again, just being patient, letting the trade play out for what it is. You can see it kind of starts forming out like a little bear flag right here. Something we always talk about: a break to the downside, a flag back to the upside, then you're looking for the next leg lower here on Tesla. And look, hands off the keyboard. I'm not trying to interfere with this trade. I'm not trying to micromanage it. I'm just watching the trade and letting the trade do its thing here. So you can see that bear flag I drew out starts to play out. You start breaking low of day. If you guys don't know what a bear flag is, again, it's that drop. You know, move back up like this. You're getting that next leg to the downside towards the target. Sometimes you get these quick consolidation patterns on the 5 and 2 minute time frame. So that's why watching out for these patterns and being aware of them is very beneficial, because they usually play out when you're getting that downside trend and you're breaking big key levels like we saw right here at 383. And obviously, as you start to push towards this next target here at 377, I'm looking to take profits pretty quickly into this key level here. So you guys can see I move my mouse over here to sell on the ask. So I'm looking to sell a limit the second we hit that. You can see right here, I have a limit set at $20. I'm just being patient, waiting for that limit to get filled. So once it starts coming down right here, you can see I have that open order set. I'm up about $1,000 at this point. The limit's set down here at about 26 a contract. I'm just waiting to get filled as you push down to the 377 level. Again, just following the trade plan. I'm not getting greedy. I'm not looking to hold and hope for more. I got my move. I was looking for a $6 drop on Tesla, up about $1,000. So I'm looking to scale out as you approach that first target, try and get a good fill. As over aggressive short people are trying to enter the trade, I'm selling into them with my sell the ask. As opposed to buying on the market, I'm selling the ask and selling to those over aggressive people trying to go short on Tesla stock at this moment in time. So pretty much at this point, just waiting for me to hit this key level here at 377. Just looking for one more push down lower to get filled here at 26 a contract. You can see right here, I'm sitting on the offer at 26 a contract. You can see right there, I just got filled one contract as you push towards low of day at 377. I'm even drawing the arrows out for you in real time to watch that trade. So now at this point, it's just pretty much free real estate. I can take profits where I want to. You know, maybe Tesla gets in there, drop down lower towards 372, but at this point, the goal on this trade is just not to let it go red, and I'm just trying to do my thing and not worry too much about it. So at this point, it's like, how much money do I really want to make on this trade? I'm already up $1,000. Cool, I can do lots of stuff with $1,000, but you know, just don't let the trade go red. And if I start seeing buyers step in the market, just sell for a profit and get out for the trade and be done for the day, because I'm already up a rag. You feel me? You can kind of see right here. This is why I take profits at key levels pretty quickly. You're just kind of stalling down here at 377. You can see a bunch of buyers trying to step in the market here. So I'm just looking for that next break and retest up here at 380. Like we said, a break, retest, push down lower potentially. So we'll see if we get there or not. You can see already rejecting through low of day through 377. I'm looking to take one more contract off here on Tesla. If you would have closed that low of the day on the candle here on Tesla, I would have been a bit more confident holding, looking for 372. But as you can see, buyers started to bid you back in the market. And then you started forming this like little doji candle, showing that there's a bit of indecision down here at low of day. So obviously, as you start seeing this candle form in real time, I'm looking to take more contracts off the trade. I'm looking to secure more profits because you're getting indecision down here. Again, this kind of just goes back to reading price action, understand the stock you're trading. But I see candles forming like this on any equity I'm trading, I'm instantly trying to lock in more profits and not try to get too greedy, because there's a clear sign of indecision down here on this candle alone that tells the whole story here on the 5-minute time frame. So once that candle flipped back green here on Tesla, I sold one more contract. Now I'm just down to one contract here in Tesla. If you get back over 380, I'm just gonna exit the whole trade, because again, I hit my targets. Now I was trying to look for 372. You didn't get that downside, just kind of hit my key level. Now it's just, like I said, free real estate at this point in time. You just kind of sat around 377 for like the next couple of minutes. You see, let me fast forward. You start breaking low of day. You start looking really solid to the downside towards 372. And out of nowhere, I think some news came out like right at like 9:15 or something. You bounced up like literally $4 back to the upside. So I obviously had to sell this trade up for about like a total of $900 like I'm talked about. But sometimes, again, you just can't predict when news is going to come out. So like you saw right there, I sold the final contract about $20.75 as you got that $4, pretty big bounce to the upside. So when you get that new information inside the trade, you have to be locking your profits and be prepared for any scenario. And that's why taking trades at key levels and following your trade plan is so beneficial. If I would have just kept on holding down towards 372, looking for the entire trade, I would have gotten stopped out, and I would have, been pretty upset I didn't take any profits off on the way down. But because I took profits off as you push towards 377, I was fine taking off the entire trade at 378 because you got this big impulse kind of back to the upside. So that pretty much just breaks down the live trade, just kind of showing my thought process, the bear flag pattern playing out in real time, and how stuff like that can be beneficial, and how price action can be crucial when you're inside of a trade. So let's just jump back over here and just wrap up the video. So hopefully you found this video beneficial and learned something from it. I heard lots of people inside the mastermind really found the live trade portion really beneficial and found it really insightful. So if you guys enjoyed the video, be sure to drop a like, comment, subscribe, and stay tuned for the next video. Peace.